If you are looking for an easy yet profitable scalping strategy, you have come to the right video, my friend, because today I'm going to be walking you through the step-by-step process that I use to take scalp trades like this one. Now, this is a trade setup we gave this morning in the Casper Crew VIP New York Open live stream, so this is a setup we've been waiting for, but I'm about to explain to you for free how you can look for very similar trades moving forward. So make sure to like the video, make sure to subscribe to the channel because we are bringing you the juiciest trading videos here on YouTube. All right, so this type of trade setup is known as a chickens drinking water trade setup. What is a chickens drinking water? A chickens drinking water is when the price forms a series of lows, and it also works for shorting, so you could say a series of highs, and then price, the market maker, goes for the stop hunt. This is where we're looking to get into our trade. All right, we can see it also happening right here from the trade I'm in right now. We formed these lows here, we formed these lows here, and then the market makers went to stop everybody out before reversing the price. Why is this known as a chickens drinking water trade setup? Well, if you've ever seen a chicken drink water, what she does is she takes her beak, she dips it down into the stop hunt, and then laps it up real quick. In fact, we have a video right here of a chicken doing just that. Now, notice how she takes her beak, she dips it into the water, bam! All right, actually, let's watch this hen right here. This is the hen we want to watch. Watch what she does with her beak. Her beak is the price. The water are the previous lows where people have their stop losses. She dips it, boom, and then she laps it. All right, let's see if we can get another shot. Boom, and then, all right, chickens drinking water trade setup. So as we are waiting for this to happen, we need to have a few plans of what we want to see on our oscillator. Now, again, this morning, this is something we were looking for as we noticed, hey, we're forming a whole bunch of these lows here, could make for a potential long scalp for the day. What we want to do first is we want to mark out the low of the range. All right, we're going to put that right here, and we can see that we are waiting for the price to dip below this level and then reclaim. And yesterday, we could have done the same thing where we wait for price to dip below and then reclaim. So now, let's head on over to our actual chart here and see like what would we actually be looking for in real time. Now, I'm using an indicator called Market Cipher B. This is the best indicator you could use on TradingView. You could use something else if you want. I do not care. But here is what we are looking for. First of all, when we mark out that level, like we see right here, we want to wait for price to dip below the level and then reclaim the level. What we want to see on the oscillator is something known scientifically as the uneven butt cheek pattern, where as the price is dipping down, as the chickens are drinking the water, we want to see this girl at a party late at night, drink in hand, with very uneven gluteus maximi, probably from squatting and deadlifting with bad form. But we can clearly see if we superimpose the butt cheeks onto the chart, as the price is getting lower, as the chickens are drinking water, the butt cheeks are getting higher over time. This is confirmation, number one, to get into the trade. If you see the price dip down below and then reclaim, that is confirmation one to hop into a trade. And you can see that we had this happen right here as well. We come down to the level. When we look at our beautiful oscillator, what do we see? Left cheek, right cheek, bam, we're getting the move to the upside right now. Now, what if you don't have the testicular girth or the fortitude within the cojones to take the trade in the minute? Well, this is where we wait for another setup called the retest. The retest, this is also a very important way to get into a trade if you miss the exact bottom. Now, let's take a look at what happened as we came down to this area. If we notice after the chickens drank, we get our initial move up, but then we get a back test. What you're going to do is you're going to come over here to Fibonacci retracement tools. You're going to pull it from that first low to the first high that we make, and then you're going to mark with a box the area that comes between the Fibonacci 618 and the 786. To get these levels, double click your fib and make sure that these are the ones you have in your chart, the 618 and the 786. You're going to draw a box there, and then what you're going to do is you're going to wait for the price to come back into that box. And when it does, you're going to look for continued bullish signs. What would we look for? Well, we take a look at our 1 minute time frame here, and what do we see? As we come back into this box, we see continued higher trigger waves. Now, there's something else I like to use specifically to get into a trade after the chickens drink water. We get our first move to the upside, then we come down for a retest. This is called bullish CVD absorption. In other words, I want to see that the big players, the market makers, not only have they stop hunted everybody, but now they're really looking to reverse the price. What is a bullish CVD divergence? A bullish CVD divergence is when the retail traders the market makers entice the retail traders to go short. Meanwhile, the market makers have their plans to go long. How can we identify this? Man, this trade is printed right now, baby. Look at this. By the way, if you want to trade Bitcoin and altcoins, I recommend my go-to exchanges. First of all, ByBit, links in the description. Also, I love to trade on MEXC because MEXC has literally the best deal on fees in the world. And if you're looking for an exchange that does not require KYC, I'm trading on ZOOMEX and I am trading on Blowfin. Also, if you want to join the Casper crew where we give the setups, because we did give these setups in advance for these juicy short trades, as you can see on your screen, you can go to jasoncaspertrading.com, click the link to join the VIP Discord, the best trading community in the world. Now let's go and check out what is happening here. What is a bullish CVD divergence? A bullish CVD divergence is when you can see in the order book that as the price is making a higher low into the Fibonacci golden pocket, there are more shorts than longs opening up. Why is this important? Because if there are more shorts than longs opening up and the price is unable to make a lower low, but instead it makes a higher low, this is telling you that retail traders are indeed following short at the bottom, but there are whales down here, and these whales, this is a picture of a whale, are absorbing those short trades to fill up a big long trade. Now, this is how you identify a bullish divergence at a golden pocket. You are going to go to a website called coinalyze.net, and you're going to open up a new profile, and you're going to create a free account. You're going to put on two indicators. Number one is going to be open interest right here. Number two is going to be CVD, cumulative volume delta. Open interest is telling you whether or not traders are opening or closing positions. If this stuff is getting higher over time, that means traders are opening positions. If this stuff is getting lower over time, that means traders are closing their positions. Now, this green line, this is the CVD. This is telling you what way are the trades opening. Are they opening short or are they opening long? When you see a big spike in open interest, that tells you trades are opening, but it doesn't tell you if they're longs or shorts. If that CVD line is getting lower while trades are opening, this is telling you, okay, we have lots of shorts opening up right here as we're coming down to our key level, which, by the way, as we know, was a CDW level. So we are seeing many people opening up short trades right here, lots of them out of nowhere. And as the price then gets our retest here into the Fibonacci golden pocket, what do we see? We are seeing from that first low a large increase of open interest. In other words, the open interest from the first low, which was down here at about 1.11 billion, comes to here at about 1.12 billion. And the CVD is also getting lower, telling us that these trades that are opening up are shorts, lots of shorts opening up. Now, if there are lots of shorts opening up, yet the price is bouncing from the golden pocket, what is the only explanation? The explanation is that there are whales that are taking all these shorts that are opening and they're using them to fill up a big long order. And from that point, we get a move to the upside, which is exactly what has happened right here. So, long story short, we're first looking for the uneven butt cheek pattern at the CDW level. If you miss that, or if you want to enter another trade or compound your first trade, wait for the first move up, wait for the retest into the golden pocket, and then look at coinalyze.net to see, are the whales, after having stop hunted everybody who had their stop losses under these lows thinking we're going to go higher, are they committed now to pushing the price up? And you can use these two indicators to determine that for yourself. That is it for today's video, guys. Make sure to like, subscribe, click the bell. May God bless everybody in the name of Jesus, Yeshua, the Messiah. Even if you are not religious, I still pray you and your family are super blessed. I will see everybody in the next video. Peace!